Okay.
Air Canada is the most dramatically undervalued stock in the airline industry. I'm going to show you how you can capitalize on this opportunity, whether you're in Canada or in the States or somewhere around the world, as long as you have access to a TSX account. Stick around to find out how. Hi, my name is Ali, and I work in the IT industry. I've been following the markets for over a decade, and I know it can be confusing and scary. I'm here to help you break this information down so you're making a wise decision about your portfolio. You've probably seen 100 videos telling you these are the stocks you need to watch out for, or these are the stocks you need to buy. But that's not what we do here. Here, we're going to show you the fundamentals and try to explain to you in normal speak so you're not confused by all these terms in the finance market. If that sounds like something you like, stick around. We're going to cover Air Canada in details. So, what is the key stock points of Air Canada? Trading at around 5x their forward earnings, it is the lowest in its class. If we look at this chart over here, we're going to see that Air Canada is only operating on a PE ratio of 4.9x, while Delta, American, and United are all over the 8 mark, Delta being the highest. Now, what does this actually mean? Most stocks on the stock market their stock value is basically measured by how much is their future predicted revenue and what are they currently trading at and how many shares they have. So let's say the S&P usually trades at 25x its future earnings. When a stock is that high, it means that it's semi overvalued. If it's over 25, it's definitely overvalued. But when you're at 4.9, it means you're way undervalued. Let's look at some of these other stats. Now, the stock currently is around $19. Most analysts are saying that it's 90% cheaper than it should be. They had Q2 revenues of almost $5.7 billion. That's pretty big for Canadian Airlines, given the size of the country and how many people live here. So the stock has been kind of tumbling for a little bit, and we'll go through the chart here in a minute. But as you can see, the stock has declined about 13% in this year alone. Now, this doesn't mean that it's bad, and we don't see this as a bad sign. Stocks go up and down all the time. That's not really what brings value to the company. So, based on these estimates right now, we're thinking that the stock should be around $25 to $30. Now, that's about a 30 to 50% upside, but I think it can go much, much higher in the future as it recovers. It had a really bad time during COVID, and I think that it might take a few years for it to climb higher than that, but definitely in 12 to 24 months, we should see the stock go up by at least 30 to 50%. Now, let's take a look at the chart for AC, and that's Air Canada on the TSX. And you're going to see some wild, wild jumps here in the stock. So let's take a look at the 5-year chart. And if we go even further before the 5-year chart, and this is on the 1-week interval, you're going to notice that Air Canada topped up at $52 at some point. And it wicked down all the way to $10 at some point, right in the pandemic. So this area, right in the middle of this area, this big drop, that's the pandemic. And if we measure how much the stock dropped, we're going to see it fell by almost 83%. And that's a lot to fall for the airline stocks. Now, since then, it's recovered and it's been hovering, in this 30, between 15 and 30 range. And what's really not helping in this really low area, as you can see in the January area, they missed their earnings call by about 1.5%. But you think to yourself, 1.5%, Ali, why is that such a big deal? It's not. This massive sell-off started happening when there was the American election, and there was a lot of threats, and people started boycotting America. And Air Canada has been suffering from that even till today. If we look back at our little diagrams here, you see that Air Canada has had some regulatory problems due to the US-Canada aviation agreements that are kind of being affected by this back and forth tit for tat with Trump and Canadians going Canada first. The other thing that we look at is what is their cost to operate. That just gets affected by fuel prices and inflation because the consumer is not willing to pay X amount of money. So the Canadian economy is basically kind of in a bit of a wobbly state. We want to rely on ourselves and we don't want to rely on the US as much, but much of our success is still tied to the US. And that decoupling between the US and Canada is going to take time. We need to find alternate routes. We'll talk a little bit more about that and how Air Canada is making strides to do that. You're going to tell, well, Ali, you showed us a chart, and on this chart, it said that all of these other airlines are doing much better in terms of their EPS, and maybe American Airlines isn't doing as good, but they are trading at 8.3, their PE ratio, and their market cap is larger, and their operational margin is higher, and their revenue is triple, and their EPS is 150% higher, and their debt to ratio is only 52%. And this is where things get interesting. A lot of people are going to focus on this number. Why is the debt ratio for Air Canada at 524%? That's really what's scaring investors. There's nothing wrong with the stock. There's nothing wrong with the company's operation. But when people see a debt ratio of 524%, they get scared. This company might be at a risk. But let's talk about that for a little bit. Why is Air Canada's debt ratio so high? Now, Air Canada suffered at the beginning of the COVID a lot, and they've had to rely on debt to stay operational. The other thing is travel really slowed down to the US. And we had a bit of a bump right, in the middle of it around, last year and in 2023, but really there wasn't a lot of travel compared to the years before that. The other thing is while they do have a lot of debt, they have a healthy cash flow, and they're investing a lot in new airlines, fleet investments, share buybacks. I mean, they just bought back 26.6 million shares. They paid off 500 million in notes that matured in July without any issue. They have strong cash flows, and they're able to pay down this debt. And I think that based on what they're forecasting for the future, they should be able to bring that debt much, much lower. But because they're an airline and they've learned from previous mistakes and previous situations like COVID and this issue with the United States, they're holding on to their cash a little bit tighter. They are paying off their debt on time. They're not defaulting on any payments, but they're not going to dump all their money just to get rid of their debt. Now, we know that Delta bought WestJet. So really, there's only one option for Canadians. If you want to buy Canadian groceries, Canadian this, Canadian that, and you want to buy Canadian tickets, you have to go with Air Canada. And let's be honest, I flew with Air Canada and I flew with other airlines, and they have really good customer service. They have very, very good customer service. So I think that more and more Canadians are going to be focused on Air Canada, and we're going to see their prices actually correct. Now, what are they doing to actually fix this? They are aggressively expanding into Latin America, Europe, South Asia, and they're connecting these areas between regions in North America. This is going to give them other markets. They're trying to focus and say, if we want to expand our markets and actually compete, we cannot rely on the States anymore because Canadians don't want to fly there. So what do? We got to expand into other markets. Very smart move. Their premium service, they have 5% growth in premium revenues, and they've demonstrated higher and higher margin segments in the last couple of quarters, which is really good. They have Air Canada Cargo, Air Canada Vacations, the Aeroplan. All of that diversification is really good for passengers. They have really good services that are attached to their airlines. You don't just want an airline. You want somebody that's going to give you points and thank you and make you feel appreciated. And that's what Air Canada is really focusing on. So let's talk about what are the catalysts to actually re-enter. For obviously, they need to pay down their debt and leverage ratio improvements, making them more appetizing for investors. Now, they have economic stabilization through US and Canada trade that they need to work on. And that's part of their expansion into Latin America and other areas so that they wouldn't need to rely as much on the States. If they can connect more regions to North America through Canada, if other countries are boycotting the States, they will fly to Canada instead. Now, they might be consolidating some partnerships to unlock more value by maybe buying other smaller airlines and things like that, but we don't know any of that off the top of our heads. So let's look at their chart real quick for this year. And let's zoom in. Now, full disclosure, I bought into Air Canada right around here, about 1920, 1940. And we've had a little bit of, an uptrend, downtrend, an uptrend. And then the missed earnings came in and we're now back in the 1950 range. And that's okay. And I'm fine with that because I'm not buying this so that we can have money tomorrow. I'm not looking to sell this in a couple of days from now. So what are we hoping for? Well, we're hoping for a bit of a run back up to about 26 and testing these highs back here, around $26. And this is, if you notice on this chart right here, right around the same time, 2023, August, here, December 2024. And then here, July, what the heck, delete that. July this year. So we really need is this next earnings call needs to be good. And we need more Canadians to choose Air Canada so we can get back to this range. Now, I'm betting on this in the long term. So I'm looking out even further. In this timeline, we're looking at somewhere in October, which is just about 2 months from now. But really, I'm looking in the very far run. And if you really, when you're in doubt, you zoom out. And let's look at this. When you look at the big picture, this looks like a massive sideways consolidation. And what we really need to do is look for this to go back up to around the $55 to $60 mark in the long run. Now, I think that if their expansions work out and they start getting more customers from other regions coming through Canada, this stock could definitely be in 5 years, possibly, in my estimates, around the 160 to 180 mark. I'd say 170 is right in the middle. Now, you're saying that's a pretty wild dream, but I'm looking at the facts. There's only one airline in Canada. Canadians are going to choose airlines that benefit their country, because I know that every Canadian here wants to be Canada first. At the same time, the company has strong cash flows. They're paying off their debts. They're expanding. They're updating their fleets. They're doing everything they can, and I don't think the Canadian government is going to let their only airlines falter. Now, if you bought, here's how we think about it. If you buy around this level, and let's say it drops down to $15, you lose 20%. Right? But the fifth 20% is $5 per share. If it goes up to 26, test its all-time high, you're looking at 35% upside. Now, I'm not saying hold the stock forever. You could play this and say, okay, I buy down here, which is what I did. And you could wait till 25, and then you could take some profits. If we go up to 20, 25-ish, it's about 30% upside. You could sell some of the stocks here. Now, personally, I want to wait until it breaks through 26 and go higher, maybe to 30. Because we've tested these, this is the resistance line. And we know we've had a lot of strong support around the 18 to 20 mark. So we want to make sure that we don't sell early. And if we do, we can take some profits around 30% and hold on to a few more shares. But I never sell all my spots in this kind of airline, in this kind of stock. Again, this is not financial advice. I'm just letting you know what I'm seeing in the moves I'm making. I think that a small position here is warranted because the upside is much bigger than the downside. The stock is never going to crash. Institutions are going to buy this up. There's going to be some level of government intervention into Air Canada. It's the only Canadian Airlines out there. If you like this type of analysis and you have other stocks that you want me to get into, drop a comment below and tell me what stocks you're looking to invest in or what stocks you're interested in or you're curious about. I'm more than happy to look into those for you and make a video about it. If you like this, please hit the like button, subscribe, and share this with people, especially Canadians, who are looking for an opportunity that might have a massive upside. I've been your host, Ali. Thank you for watching the video, and I'll see you in the next episode.